Welcome back to another episode of Monday Madness. What is Monday Madness? It's a segment where we go through the previous week and see how you could have capitalized on that move. In the end, backtesting is how we trade forward, and obviously how we understand what happened in the previous week is how we're going to understand what's going to happen in this week. So let's get straight into the episode and let me show you guys how you could have capitalized in the market last week. Okay, so let's get into the different pairs straight off the bat. Obviously, you always want to start on the daily time frame. Okay, you want to see how did Friday close, because how Friday closes will be a very good indication of what's going to be happening on the Monday. Okay, so here we could see Friday quite a bearish close, so big bearish engulfing candle pushing through. Okay, so we already knew that we are looking for sell positions. Okay, so we're going to immediately identify, well, we need to look for sells. So what we would have done is drop down to 6H. That's mostly the time frame I'm looking at. So as we actually were hitting that low points, okay, we knew we're looking for a pullback and then for a sell. Let's just load forward a little bit. Okay, perfect. So Monday morning, we're pulling back. So you already know that you're looking for a sell. So what's the key thing? Adding your fib from high to low. That's the first tool we need to identify. Okay. Then we're obviously going to be seeing quite a lot of different selling levels. Okay. So I can see price sells from that level. Okay. Price then sells from that level. Price then sells from that level. Price then sells from that level. Okay. But what we need to identify is from this level, price actually sells to the downside. Okay. From that spike level, price actually closed above, pulled back, and then moved into the highs. Okay, so we already know that we have that level over there or the highs over there, because price also sells from there. So that's the two ranges that we have to work with. So then we can see, well, the fib lining up over here is the 38% fib. Okay, and the fib lining there up at the top will be your 78% fib. Okay, so the only thing now to do, we can add some confluence. Okay, there is our psychological level of 0.67. So now we have a resistance, which is a selling level. We have area of supply. We have 38% fib. We have very much a lot of things. When it's selling trend, there's quite some things happening. Okay, so now there's two things. Okay, we need to wait for tap into that selling level. Okay, then let's quickly move forward. Let's wait. And there we have the tap. So let's quickly look at how retail is getting pulled in. From the high time frame, we can see every single time price does move up and sell from that level. Okay, there's not once where price actually sells from these lower levels, but it pulls down. That indicates to you that you should be jumping into the market, where you should actually be waiting. Now price closes inside the zone. So for a lot of people, this isn't perfect. For me, it's perfect. That is literally where I want to be. I love when the market closes inside a zone, because that gives me the power to wait for price, obviously, to play out first. So what I usually do then is I drop to the 30-minute time frame. Okay, I know that I need to close above the zone before I look for buys. Okay, market comes down. So every time a market comes out of a zone, it will form a little bit of a spike. Mark that spike off. It's called a liquidity point. Okay. Now it's pretty simple. As soon as the market closes below that liquidity point, that means that sellers have taken control. Look at how we're rejecting that liquidity point. So the definition of a liquidity point is the banks will now still try and long this position. The banks that's been buying from that bottom will still keep adding positions over there. Let's wait for market, still rejecting that level. Okay, still rejecting. Okay, there we close below. Okay, so now on the 15 minutes, we can also see that we did close below. If you struggle to see it, now we are retesting, and now we have a short position active there at the top. So we can't now go and have a big or a small stop loss. Okay, we still need to identify the supply area on the higher time frames. So at this point, we can also use our fib, smaller time frame fib from high to low, and use that fib extensions as a form of take profit levels. Okay, so we're going to be moving our take profit to there, 1,000-point trade, perfect 1 to 5 risk reward ratio. Now we can see the fact that the 61 is there. We're going to have a sell order lined up a little bit higher as well. So we're going to manually sell here, have a sell order a little bit higher. Then we can also add another sell order there. So let's wait for the price to play out. Boom, market spikes up. Sell is activated, second sell is activated, same stop loss. So if you are taking a 0.01 cent over here, okay, just going to explain on 1 cent, it's not about the money. That means that the first trade, you're going to be risking 200 points, okay? 200 points times 1 cent will equal $2, okay? That's what you're going to be risking. Okay, so now we say we're going to risk another $2 if price pushes up. Market dips into the highs, and now we're risking $1. So now we can actually use a 0.02 cent. So now we have 0.02 cent active. Let's wait for price, straight down. And you see, if you panicked, you would be out of this trade. Okay, but rather than panicking, we had a different solution. And already we're running a 1 to 5 and we're running a 1 to 3. Okay, so we can actually jump out of the market now because we've already achieved our target of a 1 to 3 risk reward ratio. So let's say 1 to 3, 1 to 5, so it's about a 2 to 8. So we're already running a 1 to 4 risk to reward ratio, meaning that for every 1% we're risking, we are making 4%. So on the second trade, we were using a 2 cent, we're already up 570 points, okay, or 57 pips. That means we're up $10 and we are up $2.6. So we are up $13 on this trade. So we can close, or obviously we can hold to our target, which was somewhere over there, already running even more in profits. And I mean, eventually price is just rejecting this area over there, so you should be jumping out of the market. So very simple trade, ended up being a 1 to 3 and a 1 to 7, so 1 to 10, meaning that we closed out this trade with a perfect 1 to 5 risk to reward ratio. We were risking in total $4. Okay, on the first one we make 6.5 times that amount. We made about 12, let's say $13, and on the second one 1 to 3, so we made about $6. Okay, so even if you are trading on a $100 account, okay, let's say you were trading on a $100 account, then you would be risking 4% on that account, and you made 20% returns on that one trade. Okay, so this video is once again about Monday Madness and recapping and understanding why we took this trade. And then as I go forward, I actually decide on the topic. So I just decided this topic is about risk management and obviously trade management. So now you are up and you're sitting on $120. Okay, sitting on $120, you are up. Okay, we're going to keep risking 4%. So you can't be now all of a sudden risking 10% and all that. You're risking the same amount for every trade. 2 entries, $2, $2. Okay, but the fact that we do have this opportunity that we are $20 up, now $20 times 4, that means 4, 8, 12, 16, 20. We are up 5 trades. Okay, so now I'm going to teach you guys a little bit of a thing of how to, what you call, push your stops forward to capitalize on your profits. Okay, so the next trade I'm going to be taking, I'm going to be not risking $4, but I'm going to be risking $8. So I'm going to use some of my profits and obviously push my stops forward. So we have 5 trades in the bag. If we lose 5 trades in a row, we're still at break even. So now the next trade, I'm going to be risking my normal 2% or 4%, okay, plus an additional 4%. So I'm going to be risking 8% on that position, okay? But if it plays out, then we're going to be looking at making $42, so 40% return on investment. So that's the plan with pushing your stops forward. So using your profits to obviously increase your profits.
Thank you once again for everyone that is always watching and supporting. Obviously, I do appreciate the support. If you guys check in the link below, there's a free community, there's free courses. Check it out and obviously let me know if there's anything you guys want me to focus on or obviously make a video on. Thanks guys and enjoy the rest of your week. May it be a blue and profitable one.